L. Gill Jr. Mr. Edgar L. Gill Jr., Senior Deputy Commissioner, Division of Corporations, Department of Business Oversight. Mr. Gill, welcome.
Thank you.
If there's any loved ones, friends, family members you'd like to introduce, please do so. We'll allow you to make an introduction of yourself, and then what we'll do is, you saw the drill, we'll go to questions, commentaries from the members, so please.
Perfect. Thank you. I'd like to introduce my family with me today. My wife, Lynette, my daughter,
Welcome.
Shelby.
Welcome.
My parents, Dolores and Dr. Gill. Good friend, James Jordan. And another good buddy of mine, Harold Presley, here today.
Welcome. Welcome.
Good afternoon, Pro Tem De Leon and members of the Senate Rules Committee. I also would like to thank the governor for this opportunity as well. The Division of Corporations within the Department of Business Oversight oversees safety of California consumers and sound operations of California's non-depository financial services industry. I'm Edgar Gill Jr. I bring to the department 25 years of experience in the banking industry, including retail, mortgage, foreign exchange, commercial, and corporate banking. On behalf of my family, we are honored to be in front of you for this opportunity today. I see two main functions as a regulator. The first is to protect consumers and investors from malfeasance and fraud. The second is to provide a fair and secure marketplace for financial products and services in the state. Over the past 11 months, my transition to state service has been enhanced and expedited by the leadership of Commissioner Owen and a tremendous team of professionals at all levels of the DBO. I look forward to our conversation, and I hope to talk more about my contribution to the DBO and answer your questions. Thank you.
Thank you very much, Mr. Gill. Now, I've seen your resume, your curriculum, and I know you are from the private sector.
Yes, sir.
I just want to ask you this question and give you fair warning. Are you sure you want to do this?
Yeah, I've been here for 11 months now.
Okay, all right, fair warning.
you.
Okay, we're going to move to questions and commentaries from the members. Why don't we start with Ms. Leyva?
Good afternoon, Mr. Gill.
Good afternoon.
Very much enjoyed meeting with you, and I too shared with you that I'm thrilled that you came from the private sector to help us and be here with us. We need your expertise, and I think blending private and public services can be very, very helpful. I wondered, we talked a little bit about small business lending, and I was wondering if you could talk a little bit about that on the record.
We sure can. Currently, the department is embarking upon some surveys and some marketplace lending amongst small business companies and whatnot. I think we're in the process right now of gathering the data. I think as we move forward, we'll have a little bit more detail. I think it's an important area for us to oversee or look at right now in light of what's going on in the larger financial scope. Some of the major banks have started to reduce the amount of small business lending that they're doing. I had an opportunity to see that as I left the industry in terms of how they were pulling away. So I think in the coming months and with the survey evaluations that we are able to achieve with the department, we'll have more data and more information in regards to what's going to happen in California with small business lending.
Great, thank you for that, and let's keep working on that. If I can be helpful, I'd be happy to.
I appreciate it.
Thank you. Thank you, Mr. Pro Tem.
Thank you, Ms. Leyva. Mr. Cannella.
All right, thank you, Mr. Pro Tem. So how has the merger of the two departments gone so far? And is there an estimate of any budget savings that will be obtained as a result of the merger?
Yes. Having been here for 11 months, the merger took place in 2013. So I think I'm on the tail end of seeing the two departments come together and the synergy that's being created in terms of just conversation on the examining side, on the licensing side, how we do business as a total unit, I think is, from my opinion, after 11 months, I think it's been quite successful at this point in time. In terms of budget savings, as you know, the two departments had real estate, or in separate buildings in 4 different cities in the state. And as we consolidate, I think in Sacramento, we've already seen a significant budget savings in regards to a number of people and the consolidation of the office space. So we're embarking on that again in terms of San Francisco, and I think within the next 18 to 24 months, San Diego is also on the agenda for consolidation. So with that, we'll continue to see cost savings. In terms of people and resources, I'm not sure if we see that as much in the future consolidation because most of that took place in Sacramento, and I think it's already in place.
Okay. So how are you reaching out to the variety of folks that you serve? So how do you, work with the folks you serve when you're developing whatever affects them? And then what is your process for handling complaints?
Sure. In regards to outreach, I mean, there is education that the department does from an outreach standpoint. We just participated yesterday in the financial literacy kickoff here at the Capitol. In regards to daily communication and regular communication, our examining pool, our special administrators, we talk to licensees on a regular basis in regards to our process, their process, how they engage one another. In regards to, I think the last part of your question, which was complaints.
Yeah.
We've consolidated our complaint system between the two, DFI, Department of Financial Institutions, and Department of Corporations. So I think the level of service that we're starting to see is an improvement because we're all talking the same language for one department. I think as you oversee a merger of this magnitude, you at one point or at some point you want to be on the same page in terms of your communication. The complaint process as it is right now has improved from the standpoint of DocuNet, a system that, an online system that was created for the Department of Corporations or Division of Corporations, which now allows folks to complain through an electronic system. So once we get that information, I think we learn from it. We see trends. We also see opportunities to enhance how we do an examination process. If we're seeing trends that point to one particular thing, we can address that in either our bulletins that come out from the commissioner or the roundtables that we do with the industry in regards to addressing the things that we're seeing.
Okay. Explain to me how crowdfunding works, and then what is the process you have to ensure proper oversight and enforcement?
Well, coming from the banking industry and spending 25 years there, we've seen various people and various organizations try and create a number of ways to basically do banking. Crowdfunding is just another one of those instruments where individuals can come together and create a funding nest for a particular project. And it can be any level of a project, be in the millions down to the thousands in terms of what the needs are. I think from an oversight standpoint, the same principles will apply and the same oversight will apply from our standpoint on any of the securities that are either funded or used to fund for crowdfunding. The department will have oversight or continue to have oversight there. We won't necessarily look at crowdfunding, but we'll look at the participants in the crowdfunding source.
Okay, great. Those are my questions. Thank you very much.
Thank you very much, Mr. Cannella. Ms. Mitchell.
Thank you very much. It's good to see you again.
Thank you.
Couple of questions. One on the expansion of online marketplace lending, that entire industry, which is fascinating to me. But let me start with payday lenders. Sure. I am clear about the business model and what the design was intended for, to act as a emergency-only bridge to help folks. But numerous studies, one of the more recent one by the CRL, found that the racial and ethnic composition of a neighborhood is the primary predictor of payday lending locations. And as a result, they found that payday lenders are nearly 8 times as concentrated in neighborhoods with the largest proportion of African American and Latinos as compared to whites. The reason that's significant is that it drains nearly $247 million in fees per year from those communities that are typically disenfranchised. That's a critical issue that this legislature has dealt with from a variety of perspectives. I think we also are struggling in dealing with the underlying need for payday lending facilities with raising the minimum wage and all those kinds of actions. But in the meantime, a number of other states have implemented small loan rate caps to address, not get rid of payday lenders, but stop them from, quite frankly, gouging vulnerable people in terms of the fees that they charge for the loan. What do you think California should do? Coming from the private banking industry, I think folks are often are limited in terms of their options. Sure. Many of them are the unbanked, and therefore rely on this kind of facility. So given your background, given the kind of direction other states are going, what do you think California should do?
Well, I do appreciate that question, and I thank you for asking it. I also look at it from the standpoint that having spent a long career on the banking side, to see how banks have moved away from that market. I think it's probably approaching 25-30% of the population is unbanked at this point in time, which leads you to the understanding that those areas still need access to capital.
Agreed.
And the tools and the vehicles that are available for them to have access to capital happen to be payday lending at this point in time. I think from our perspective, from a regulator standpoint, we need to make sure that the laws that oversee payday lending are adhered to. There is some current discussion in regards to how the payday lending operation works at this point in time that is, I think, will be in front of the legislature soon. Assemblyman DeBobney is working with the department in regards to that. I would give you my personal opinion that there is a need for these types of entities, but they have to be regulated. It has to be policed. We've got some current studies that are looking at the potential of debt traps and debt cycles, the turnover numbers of the individuals that are utilizing these tools. It's a little egregious. So with the opportunity to have a pilot program for a larger dollar amount, so you don't have to go back continuously to the payday lenders, which will also work in favor, I think, of the consumer from the standpoint of creating a credit history. It's a little bit more expensive, but it looks at underwriting guidelines as well, which you don't see on the payday lending side. So as a result, I think the tools that we're trying to develop or in the process of being developed will be beneficial in terms of telling us, what does this market need? Will they be able to survive using a higher dollar amount for a loan and at the same time get some benefits out of it? Because right now, it appears to be a debt cycle that a lot of the, I would say, most vulnerable people in society can't seem to get out of. And so it looks like it becomes almost predatory on the part of the licensees in that market. Now, I don't want to go as far as saying that's what it is. I don't think that's fair to the industry. But from an opinion standpoint, there's a need for capital in that community. Access to capital is being provided at this point in time, but it can be done better.
And so the tools you talked about, I'm not familiar with Mr. DeBobney's bill, but the tools you talked about, and in terms of one option being increasing the amount of the loan, are the loan rate caps a part of the toolbox being considered? Because I think I would be equally as afraid of increasing the size of the loan if we don't address with the fees and the loan rate, because that could just get me in a bigger hole.
Yeah, there are caps in place for that product at this point in time.
All right.
It's similar to just some of the small dollar lending that's on the table right now. I think it's $2,499. But in the event where you are rolling over 6, 7, 8 payday loans, that becomes more of a useful tool. Obviously, you have to qualify, and obviously there will be limitations on the amount that you can borrow. So.
Okay, all right. And my last question, Mr. Pro Tem, deals with the notion of online marketplace lending. And what do you think the DBO's role should be, if any, in regulating online marketplace lenders? What are some of the challenges of regulating this kind of new product, new from my perspective at least, as compared to traditional brick and mortar lenders?
Well, again, I think technology is here. It's not going to go away at this point in time. And I think the tools and the resources that are out there for licensees or businesses to use, I think we accept the fact that they're there. The question mark becomes unlicensed activity, the amount of effort that those online lenders are making to make sure that they are applying for licenses properly with the department. I think we've seen some cases where we haven't seen the aggressive nature of a licensee get their paperwork in, apply for a license before they come into the market online and start producing loans. So with that, it becomes a violation once we find out from the department's standpoint and in the review process. But
and that's the only point at which it would come to your attention. I could have a site and be in the online lending business prior to it coming to your attention or being regulated in any way?
And that's true. I mean, if you establish with the makeup of how the industry is run, you could have an online business that you start up, and if you don't apply for your license, you have access to the internet. There's nothing policing you there. But we do have, I think Google is, we've worked with Google in the past in regards to making sure that when we see those things, we're notified from them from the department standpoint, as well as that's how the complaint process works effectively and efficiently as well, because we get a lot of information from and through that source.
Thank you, appreciate it.
Thank you, Ms. Mitchell. Any other further questions or commentaries from the members? Seeing none. Those who are in support of Mr. Gill Jr.'s confirmation, please come on up. Those who are in opposition to Mr. Gill Jr.'s confirmation, seeing no opposition or support at this moment, why don't we go to a motion? We have a motion made by Ms. Leyva. Madam Secretary, please call the roll.
Senators Cannella. Aye. Cannella, aye. Leyva. Leyva, aye. Mitchell. Aye. Mitchell, aye. Runner. DeLeon.
Aye.
DeLeon, aye.
Mr. Gill, congratulations. You have passed this committee, and we'll see your nomination on the Senate floor very shortly. Congratulations to you. You're welcome. Colleagues, we will work the file. We have file item number 3, and then we're going to go to 5 through 13. We have a motion made by Ms. Mitchell. Madam Secretary, please call the roll.
Senators Cannella. Aye. Cannella, aye. Leyva. Leyva, aye. Mitchell. Aye. Mitchell, aye. Runner. DeLeon.
Aye.
DeLeon, aye.
Motion passes on a 4-0 vote. We're going to adjourn the Rules Committee, and we're going to reconvene in an executive session.